All right, we're live. So welcome back to Dapp University. So today we've got a lot to cover in today's live stream. Today we're going to particularly talk about some NFTs that have a serious problem. Okay. We're going to look at that. We're going to look at some other news updates that have happened in this space. We're going to answer some of your questions, check on the cryptocurrency markets, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below. Like, just ignore them. I'll never give you my phone number or ask you to invest with me. So we got people jumping in the chat here. We got Code Chap. We got Jake and Agnes. Rich, Egghead, Alan, Lee, Anthony, Angela, Wendy, Adrian. Welcome, welcome, welcome. Hard for me to find the unique name. Sometimes people like comment twice, and I'm like, I already read that name. All right, so let's go ahead and jump in here and talk about some NFTs that have a major problem. Okay, so I'll preface this by saying one of the things that people have been so excited about with NFTs, so these are the non-fungible tokens. One of the biggest hypes around NFTs right now are definitely the ability to, collect them. Okay, so I just saw my camera's like running out of battery. I hope I don't like totally lose this in the middle of the stream. The ability to collect things, appreciate and value over time, trade them. I made a video on Friday talking about what's really possible with NFTs long term, with digital signatures, all that type of stuff, the features that Twitter's rolling out for NFTs. It's really, really, really amazing, right? Tons of potential in the space. But some of the experiments with NFTs are actually not going to end well, in my opinion, okay, around very specific types of NFTs. So I'll explain what it is. Basically, these are the NFTs that are generating yield, all right, or some kind of return, passive income with the NFTs themselves. So why is that? Well, one of the benefits of NFTs in general is that they have kind of been a different category than regular cryptocurrencies that have been launched with DeFi protocols, tokens launched on top of the Ethereum platform, where people haven't had the same type of regulatory fears about NFTs that they have with tokens. Because one of the big gray areas in the cryptocurrency side of things, when you create a token, is, are you creating a security? Okay, is this something that can be regulated by the SEC? And if you didn't take the proper, precautions, and you didn't, follow the necessary steps, and you didn't sell it to the right people, then you could be, there's some serious violations, okay, under the law, under securities laws. So that's one of the big scares in the token world, but people haven't been too worried about that in the NFT world, because they're like, hey, this is not a security, like it's just a collectible, right? It's like if you bought a baseball card, how would you consider a baseball card a security or something like that? Sure, somebody bought it with the hope that it's going to go up in the future, but the asset itself is not, the purpose of it is not to necessarily promise a future financial return. But some of the NFTs actually are crossing that line, because they're starting to say, hey, you buy this NFT and we're going to guarantee a certain amount of yield. And we're starting to see some pretty quick backlash from some of the NFT marketplaces who don't want any regulatory crackdown on their operations, just delisting the projects immediately. So we saw this with OpenSea. OpenSea delisted DAO turtle projects, citing financialization concerns, okay? So trading the pixelated turtles was disabled last week, with OpenSea claiming the project had broken its rules. So over $2 million in the NFTs had changed hands prior to the ban. Okay, so $2 million trading volume. So basically, the collection of 10,000 DAO turtles dropped on October 4th and has since recorded trading volume OpenSea of over 570 Ether, roughly $2 million. Basically, the sales came to an abrupt end, and they talked about why. Basically, it says an employee of the company or the DAO turtles violated its terms of service, clarifying that it is forbidden to use OpenSea's carry out of financial activities subject to registration or licensing, including but not limited to creating, listing, or buying securities, commodities, options, real estate, or debt instruments for fundraising for business protocol, et cetera, et cetera, et cetera. Okay, so talking about the same securities concerns that I've talked about here. Since the DAO turtle, So here's what it is. Concerns about the attachment of NFTs to financial products has led some to suggest that they could come to be viewed as securities. For its upcoming NFT marketplace, the crypto exchange FTX will also eschew projects that offer royalties. So the royalties are the real gray area here. And I saw a thread about this on Twitter that I thought was pretty good. So basically, why passive income, air quotes, equals lose all your money. So basically, with every project coming up with a token giving hopes to the promised land of passive income, is this really the truth? What do you need to be aware of? What would wipe your wallet? What to hold to truly take advantage of this DeFi plus NFT movement. So we said to start, the genesis of this was started by Cyberkongs, okay, with their 10 banana yield per day for 10 days, all right? Current price of bananas is $72, so $720 a day or $260,000 per year. Not too shabby for holding a JPEG. So this is what really inspired the current movement of projects all coming up with a token, giving yield passive income to holders, many of which give, over 100% ROI per year. And he shows a table of all the new tokens coming up that do this. So here's the problem, basically securities. The biggest risk to holding these NFTs is that here's the key, any vehicles with promise of returns, royalty, sales, commission, is deemed a security from the government standpoint, which means there will be a lot of regulations to go along with it. Simply put, we don't want that. That's why legit projects would consult with lawyers to ensure the position themselves well away from the blurry line. So what makes something a security? So basically, it's the Howey test. We talk about that a lot on this channel about, this is sort of the rule of thumb that they use to determine what constitutes a security. So basically, any instrument that's promising a financial return like this. So he says this is where the Dow turtles messed up, promising returns explicitly, falling into definition of security, which led OpenSea to delisting them. All right. In the case with Cyberkongs, they state clearly one banana equals one banana. There is no economic value in them, and it's not an investment. So nanas are purely Cyberkong token for the ecosystem with governance and such. So where does the value come from? It's up to the community users to give it value. Basically, substance trading this stuff over the counter. So anyways, so what gives the token value, utility? And then it goes on to talk about how this is a better model because at the end of the day, the community values it. If you want to check out this full tweet thread, I'll put it in the live chat replay right now. I'll just paste it in. Okay. So, yeah. So that's something we want to watch out for. At the end of the day, like I said, none of this is financial advice, but I am always okay with telling you to exercise caution when you're, getting into something that could have potential problems. All right, you definitely want to watch out for NFTs that are promising royalties right now when they have so much regulatory unclarity about what that looks like. So he's kind of making the case here that Cyberkongs is a better situation because they're saying the bananas are just bananas. They don't attach a dollar amount to them. But, who knows if that's even going to fly long term either. Definitely watch out. Be careful. This is something that I think is not going to end well for a lot of projects, but long-term could have quite a lot of potential, assuming that we get regulatory clarity from this and someone can actually pull it off in a way that makes sense long-term. Because like I said, one thing that I'm so excited about for NFTs is the utility value that they can provide and the creative things that you can do with them long-term rather than just like hold digital art, kind of look at pictures on the blockchain. I'm not even saying that's an invalid use case. I think that's definitely cool for people who want to do that and who like it, value that digital scarcity. But I think it's just a very simple implementation, and you can have so many more, benefits beyond just that I really think enhances the value proposition of NFTs long term. So that being said, there will be some bumps along the way, some hiccups. So watch out. Some of these projects are going to get absolutely wrecked, in my opinion. So let me know what you all think down in the comment section below. Anybody hold Cyberkongs? Anybody hold any Dow turtles? Somebody says, I feel like a lot of basically that they think the NFTs are going to crash hard and that, yeah. It's very possible, and I think the entire NFT space could tank. Here's the thing. This is what you have to understand about crypto assets in general. Things that are brand new and have less price history are by definition more speculative because they have less of a proven value proposition. And when there's some sort of panic in the markets or some sort of anything that causes the general trend to reverse, those brand new things tend to fall the hardest. I mean, we saw this in the last major cryptocurrency bear market from beginning of 2018 all the way through 2019. Brand new stuff got absolutely wrecked. Some stuff never even recovered in the first place. All right, you can find cryptocurrencies. Just go to like the last page on CoinGecko. You know what I mean? Stuff that's been around for 5 years that never even recovered. Okay, from the last bear market. I mean, you have all these assumptions that crypto's in this nice, neat, like 4-year pattern, and everything just kind of goes up and down together. It's like, it's not really true. Some stuff just gets gets hyped and then never recovers. And that typically is way more likely for stuff that's brand new. That's why I'm saying be cautious with NFTs, particularly the ones that could get whacked by securities laws. There's a few kids in my Discord got mechas. Is that how you pronounce that? I know what project you're talking about. I don't know if I got the pronunciation right. All right, let's go ahead and check on the crypto markets here. I guess while I'm doing that, if y'all have any questions, go ahead and drop them in the chat. I'll circle back around those here in a minute. All right, so checking on the crypto markets here. Bitcoin looks like it's doing its thing. 57,530. Let's say 600. Can't talk this morning. $57,635.39. All right, so we are, I believe, at a 14-day high. Yeah, it's looking strong, looking pretty bullish. I want to see if we can break 60K soon. That would be exciting. Of course, not financial advice. Don't know if we'll get there. One thing I would expect pretty soon, on the grand scheme of things, is for Bitcoin to get a little bit of a rejection somewhere. I don't exactly know where that's going to be. I'm sure I could, get out a chart and draw some really convincing lines and say, it's going to be here. But it's just kind of how Bitcoin tends to work, right? We kind of get these spots of resistance and then it corrects. But, I mean, this chart's looking pretty good. It's looking pretty good. It's like we're trying to get back up to these levels. And the really good thing about these levels is we have way less froth in the market than we did when we were back here, okay? Because if you were around at the beginning of this year, it was absolutely insane. Like, this was a massive bubble where everybody just thought they were going to get, Bitcoin's about to go to 100K in a matter of a few weeks. And it felt like Bitcoin was about to go to 100K in a matter of a few weeks. And then we kind of got this random technical pattern and it blew up. But we have way, 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 way less froth here. And I think we have more and more people in the space kind of anticipating something big for Bitcoin, all crypto market over the next several months, 2 to 6 to 9 months, something like that. The other really great thing about this is as crypto sort of had this correction, okay, I'm just using Bitcoin in general as an index for the overall crypto markets because Bitcoin's definitely leading this rally right now, leading the market in terms of overall general direction. The other good thing about this correction here is it builds a much more solid foundation for Bitcoin to reach a much higher price level. Like, if we just kept going up in a straight line right here, I don't think there's any way Bitcoin could have gone past $100,000 and stayed there for more than like a day. You know what I mean? On the grand scheme of things, it would have crashed real hard, real fast, probably. But you see, you have to think about in terms of price history, right? Like, how long has Bitcoin been above $10,000? Well, a really long time at this point, okay? You have multiple times, even over the past several years, over the past 4 years, that Bitcoin is above $10,000. Now, several times under $10,000, right? For sure. But you think in terms of likelihood, it's like, well, if Bitcoin crashed really hard, you could very well be back above $10,000 at some point, but it's like we have way less price history above $60,000, for example. You got like a couple days above $60,000. But now, thinking about it in the middle, how much price history does Bitcoin have above $20,000? Well, before the beginning of this year, it had none, okay? before December 15th. It had none. But after that, Bitcoin's had almost a full year of price history above $20,000. So what's the likelihood you'd be able to sell a Bitcoin for at least $20,000? Well, it's pretty likely at this point. Now, what's likely you'd be able to sell Bitcoin for above $60,000? Well, it's way less likely because we've only been there for 3 days. Okay. So applying that logic and thinking through it long term, this correction has been really healthy that can help support higher price levels. So we can actually check on what's going on with the other markets as well. And the other thing is when you see this kind of, when you see this here, it just kind of gives you a general direction that this feels way less like a potential bear market, right? I mean, when Bitcoin is doing this and failing to reclaim new highs, it felt like a bear. Or to some people at least. I mean, I've always been bullish that this entire time, but this is looking way less like that possibility is just way less at this point. You always have to think about crypto markets in terms of probability. How I like to think about it first and foremost is fundamentals. What's fundamentally happening in the cryptocurrency markets? Cryptocurrency prices are a function of supply and demand. Okay, what are the reasons that people would want to hold the cryptocurrencies? I always like to think about the utility value. That's why I focus on the technology so much, in addition to just helping you all, get these skills and, change your careers, get in this industry, become blockchain, professionals. But from that standpoint, evaluating cryptocurrency markets in that way, and then saying the more you can do with this technology, the more it gives people the reason to hold their cryptocurrency insofar as the cryptocurrencies integrate with the technology itself. And since the economics of the cryptocurrencies is scarce, and you create that demand, that's what causes the price to go up long term. So you start with that, and then you start with probability, and then you go to probability. What's the probability that, your thesis is, assuming it's true, what's the probability that would affect the price by X level, Y level, Z level? And then you're always looking for ways that could be wrong, and you adjust your expectations based on those probabilities and light of new convincing information that might persuade you otherwise. But as far as big picture stuff, nothing big picture for me has changed over the past 6 months to a year. I'm still leaning bullish, and when you see the charts confirm your thesis and confirm the probabilities that you're talking about, it way likely increases the probabilities that you're right. So that's how I think about it, because nobody knows for sure. Okay, nobody knows for sure, despite what they would tell you. And the best thing that I can do for you all is help you understand how to think for yourself rather than rely too much on what somebody else says. So I got any questions in the chat? So what's the longest I've waited for a deposit to show up? It depends on what platform you're talking about. If it's a Bitcoin, it could take a Bitcoin a long time. If it's Ether, it depends on what the gas price is for the Ether transaction. So which L2 are we leaning towards? It's a good question. Let's go ahead and take a look at the layer 2 scaling solutions here. So what we're going to do is somebody asked a question in the chat, which layer 2 am I leaning towards? So we'll do a quick recap here. What is a layer 2 scaling solution if you're not familiar? And also just a heads up, looks like my camera battery is running low. Let me see if I can actually change that out really quickly. Let me see if I can. What if my screen will work here? Hold on, everybody. Yeah, so you can see my screen. So I'm actually just going to do a really quick wardrobe change here. Not really. I'm just changing the battery out my camera. And let me see if I can actually get it to work, because I'm afraid that it's going to just die on me midstream here. Normally I have it plugged in, but actually I used the battery a couple days ago and forgot to change it. So let's just do that now. I'm still here, everybody. Don't worry. All right, now let's see if I can get the camera to work again. Every time I restart the camera, I have to Yeah, awesome. Perfect. Okay, it's back. So, thanks for bearing with me, everybody. So somebody asked me what layer 2 am I leaning towards. So really quick recap, layer 2 scaling solutions. This is how we make Ethereum faster and cheaper to use right now without Ethereum 2.0 coming out. All right. And even with Ethereum 2.0 coming out long term, we're still going to rely upon layer 2 scaling solutions to get the speed and low cost transactions on the Ethereum network, make it actually scale to where we want it to for mass adoption of blockchain technology. Okay, so layer 2s are critical for the long-term vision, and there's actually people are starting to talk more and more about the modular blockchain design long-term rather than the monolithic design of blockchains. You know, basically saying that the future is about building blockchains in multiple layers. I've always talked about that. It just has its kind of new name applied to it. I guess that really helps for building narratives, all that type of stuff. But we talked about layer 2s quite a bit. And earlier this year we saw Optimism coming onto the scene. We saw Arbitrum coming onto the scene and making an impressive entrance. Now having 57% of the market share for TVL. Okay, so this is big. So anyway, somebody asked me which layer 2s am I leaning towards. I mean, right now in the short term, I'm gonna break it into multiple categories here. So right now I'm gonna talk about general purpose layer 2s. So these are really important in my opinion because it basically creates this brand new second environment for you to build applications on top of that are permissionless once they're fully open for everyone to use. Permissionless, where basically developers can create anything they want to on these layer 2s. It's kind of like having just an open blockchain environment, public blockchain that you can do whatever you want to on top of. There'll be other layer 2s that are more application specific. You can see that here with like DYDX is layer 2, built with Starkware. The purpose really is just to power their exchange. It's had a lot of success as well. I mean, it's the number 2. So I'm going to separate these out into multiple categories. I don't want to talk about application-specific layer 2s. They're awesome. They're here to stay. I think they're essential for this ecosystem. I'm talking about general-purpose layer 2s. People can do whatever they want to on them. So right now, the leading category is optimistic rollups based layer 2s. Why is that the case? There's a couple reasons. One, there is less... I want to say this very... with as much tact as possible. It's kind of easier to create an optimistic rollup solution than a zero knowledge based rollup solution or others, right? It's not easy at all on the grand scheme of things, but by comparison, it is. Okay. That's why I want to be careful when I say that because it's insanely challenging to build blockchain infrastructure in the first place. But the other big reason is for adoption of the technology itself. For developers to move their applications over something like optimistic rollups, they basically don't have to make any code changes, basically, right? They don't have to, what I mean by that is they don't have to completely rewrite their app from scratch, like a new programming language, and then port it over to the specific layer 2. That's not the case with all layer 2s, okay? So it's kind of easier, air quotes, to bootstrap a optimistic rollups based environment. It's way easy for developers in the grand scheme of things to port their apps over to there, okay? So that's why we're seeing optimistic rollups take off quickly. I don't necessarily know that optimistic rollups-based solutions are going to be the preferred long-term scaling solution. I definitely am excited about zero-knowledge-based rollups. We can talk about that here more in a minute. But of the optimistic rollups things, I mean, I was really excited about Optimism when they first came out. Still am excited about Optimism. Honestly, what happened with Arbitrum in a short period of time surprised me at how quickly they kind of gained some of this market share. So, I mean, I'm excited about both. Yeah, but I will say what's happened with Arbitrum has been pretty impressive. Somebody said, would a send, receive only L2 makes sense? That's basically what a payment channel is. Somebody says rollups are not layer 2. Why is rollups not layer 2? Somebody says, is it true that ETH gas fees will be around 10 cents per transaction, or do you have other numbers? ETH2 gas fees? No, that's not true. Talking about for basically sending ETH from one account to another. Well, that all depends on a lot of things. We have no idea what the Ether price is going to be whenever ETH2 fully rolls out. We don't necessarily know what the demand for the network is going to be when it fully rolls out. I don't think it's going to be 10 cents, but here's the thing. That's what layer 2s are for. I mean, really, that's what I was talking about before. Like, layer 2s are the long-term vision for Ethereum with Ethereum 2.0 fully rolled out. Now, there will always be demand for base layer Ethereum, layer 1, when you're talking about large amounts of money, because you're going to be able to, I mean, if you're talking about just sending money around, and let's say you're talking about something north of $10 million, like, you want to pay for the security of the lower network. A lot of people will, put it that way. And if it costs you a significant amount of money for move funds around, like, it's relative to the amount that you're sending, it's not that much. Let's see if we got any questions here. Somebody says, have I ever evaluated Phantom, Harmony, and Avalanche from the point of decentralization? Could you provide your conclusion? Definitely go check out the video I did about Avalanche recently, like in the past month or so. Maybe 2 months. It's hard to remember. All kind of blurs together. What are my thoughts on Shiba? Good or bad? People going crazy over it? I'll just put it this way. I stay out of the meme coins. I stay out of dog coins. I'm not saying that people can't make money off of them. People clearly have made money off of them. I just don't really participate. Somebody says, is it the end of NFT? I don't necessarily think so. Somebody says nobody asked that. This isn't even live. It's definitely live. Rob. Why would I spend time to create a video and then put it out there like 5 days a week if I didn't just do it live in the first place? All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with the technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.